I want to be sharing with you today my Elliott Wave Count on Bitcoin. This is a very well-respected count, very technical and very valid. And it is also highly anticipated and requested. So it's going to be a massively good video for you today. We're going to be going over how this Elliott Wave Count points towards lower prices within Wave 4. But that lower price dip is a buy opportunity for another nice big move to the upside to come. So although the Elliott Wave Count in itself is pretty complex, we're in a Wave 4 and within that we have a WXY correction going on, which is a complex correction. But do not worry, I'm going to break down this very complex theory and count, but analyze it and talk you through this, explaining it in a way that is very easy to digest. So even the super new trader is going to be able to understand what I am talking you through in this video. That is my mission. That is my goal. Of course, I want you to enjoy the video. I want you to learn a lot from this video, and bringing it together, I want to prepare you for what is to come next, because I believe I can see in the charts what's happening here. And the preparation and levels and theory that I'll be going through today is really going to prepare you for a massive big move. So yeah, that is what I'm looking to do. And I truly hope that you enjoy the process. So let's come over to what you're here for. And that, of course, is the charts, the lovely Elliott waves that we're going to be going through today. I want to start by saying this. Elliott Wave Count is one of a few different tools that I like to use. And what I like is when I have a few different tools lining up together. That is what I call confluence. So before we get onto the Elliott Wave, let me talk you through what I have been talking you through here on YouTube in the past few videos. That was, of course, reminding you of this bigger three drives pattern. From the all-time high, we had the first drop, rally, the second drop, rally, and we're waiting for the three drives pattern, which is another drop to the downside before a bigger rally. So we have this Elliott Wave Count. Well, that's what I'll be going through. We have the Elliott Wave Count, which has been pointing to lower prices. But on top of it, we also had the three drives pattern. And something that I was talking through is the order flow that we saw at this low. And for me, one of the biggest reasons, like a primary reason why I felt, and this was a tweet yesterday that was before the drop. So if you're not following on Twitter or X, make sure you are following on X and set the notifications for my profile. So as soon as I make a tweet, you're actually alerted to it, because, you know, I would have alerted to you what I was looking for before the drop happened, of course. And of course, it goes without saying, right? If you want to not even wait for the tweets, but see it live at the time of me actually saying it, then you can do that at the Champions membership. But what I was saying anyway is I was really wanting to see the 115,000 lows taken out, those lows from the 25th of July, which of course were these lows. And so I was seeing that it was a very high likelihood that we will get this drop to the downside and take out these lows and that liquidity. Again, from the Elliott waves, because of the three drives pattern, because of the order flow that we had left down at those lows, which for me were making a bad, poor low. There was a lot of reasons, technically speaking, of why we will get this bigger move to the downside. Also, if you were paying attention, you know I was saying $117,000 is so key. You do not want to see that lost. And what happened next is we come down and we hit the CC. We got another bounce to the upside. But upon hitting below $117,000 into the CC, it's activated a major sign of weakness. So although it didn't follow perfectly along, we got a little bit of a larger bounce to the upside. We are still ultimately following the bigger plan of coming down and taking these lows. And I want to share this in a way, of course, from the three drives, but from the Elliott Wave perspective, because this is where I really think you're going to learn a lot of how we recognize this to be a WXY rather than being a finished ABC correction and the start of a new impulse. So pay attention. This is fairly complex, but I will make it as easy to understand as possible, because I mean this. Elliott waves are the best tool in trading. I mean it. So yeah, with that said, let me back this up with some loading up the Elliott waves, and let me talk you through this. I am understanding we are getting a bit of a move to the upside here as well, so I'm fully understanding. I can talk you through this as well, but first of all, let's focus on the Elliott wave count. But we are getting a bit of a bounce right now. So let's load up this Elliott wave count that we got going on. So overall, it's still a bullish count. Why? Because if we are in this bigger wave 4, in a 1, 2, 3, 4, that leaves us still with another move to the upside to come. So this is why I'm saying that this for me is still a buy the dip opportunity. We could even come down, well, all the way down to $108,000, and we can still be within this bullish scenario. So the most important thing of Elliott Waves is when you have your invalidations. Okay, it's good to know when you're right, but it's also very important to know when you are wrong. And that is what Elliott Waves provides. And it is a major, massive benefit, by the way, in trading. So I want to talk you through this very quickly because I know we don't have too much time. I want to get this out before New York Open, and I'm also going to be trading New York Open. So, I've got about half an hour here maximum. The first of all is the start of the count where we, of course, have, let me talk you through this in case you're unaware. We had this first move to the downside built with a little zigzag, right? So we saw a really clean 1, 2, 3. We started off with a simple A. That gave us the A. And then we moved on to a complex, well, not really complex B, but we had within this a triangle, a bit of a symmetrical triangle with the low of A formed. And then we formed the high of A internally. A, B, C, D, E. So a very, very, very simple type of symmetrical triangle going on there. That gave us then the bigger impulse, okay, or the zigzag, sorry. So the bigger A, B, C, D, E. That gives us a completed A, a completed B. And what happens next? You come down for your, you got it. You come down for your C wave. A, B, C. That potentially could be the end of the correction. What you look for next is an impulse to the upside to confirm that, or a failure. And the failure was confirmed yesterday. Okay, a hard confirmation was confirmed yesterday. Why? Because if this was a 1, 2, 3, 4, 5 and the start of a new impulse, you cannot be coming down below the top of A. No, below the top of wave 1. So if that was the 1, 2, you cannot come down below the top of the 1 on the wave 4 correction here. So it was really, really, really nice yesterday. And this is why I was saying that holding this low was super important. And that's why I was making this prediction that if we come down and break this low, the next rally that we get has to be a short trade. Because if we break down here and we tap the CC, again, if you're quick on trading, you can long the CC, you could have took profit, you could have made profits on the long there, don't get me wrong. But the bigger idea, of course, is look to short the rally, although you can take the long and then the short of the rally. But the reason why is because this is confirming bearishness. It's confirming to us the X wave. And this is why I just truly love Elliott Waves. Because after we saw this move to the downside yesterday, it was just fully, massively high, like 99% probability that we are going to make a new low, right? Elliott Waves are so powerful when it comes to this. So I hope that you understand this. Let me say one more time, because I know it's fairly complex. You had this first initial move to the upside, right? That first initial move to the upside. If that's a 1, 2, 3, this wave 4 cannot come down below the top of this. As it came down below the top of the wave 1 here, it invalidates an impulse. That is confirmation of an X wave failure. So you just have the most perfect opportunity. Once you realize that, you have to be looking to short this rally. And even better, the rally was bigger. What happened? Well, this was happening on the Thursday. What do you have here? You have this price action is from Tuesday, this price action is from Wednesday, this price action is from Thursday. So as you're getting this rally, you rally up into previous day high. And you are gifted actually a very simple, easy short trade. Previous day high, swing failure pattern. Right, swing failure pattern of previous day high. Given the context, with a 99% probability, you're going to be making new lows below the $115,000. You've got several different reasons, from 3 drives patterns to Elliott wave counts to poor lows on the order flow, everything coming together. You could also say how everybody is super long right now on Bitcoin. It's also the unexpected, in a way, idea to come down this low. So, where I'm going with that is you fake out previous day high, you are gifted a very kind of simple short trade, where again, if you longed the CC, this is, of course, a nice take profit on the long. You've got to be taking profits there if you long the CC. And at the same time, you can lock into short trade, right? You can take 2 in 1 because of the high probabilities that lower are coming. And of course, this is not hindsight, because I was literally saying about this yesterday before this move to the downside. I was looking for this next move to the downside, primarily all because of stemming from this Elliott wave count. So then that leaves us in a little bit of a position now where we have essentially formed and completed a nice W confirmation. This is an X wave. There's no other way to count it. And then we're working on the Y. I want to now say how I like to use correlations to analyze markets. So we could say Bitcoin itself. Do you have a major long trade setup down here? Is there anything that screams to you, this is an amazing long? Well, intraday, you have a little bit of a swing failure pattern, right? Nothing crazy, but you have a bit of an intraday fake out. Again, that in itself, you could long Bitcoin here at this around the start of the London session. You could have longed Bitcoin there around the start of London session, looking at only Bitcoin itself, but it was a little bit aggressive. But what was the confluence here? And this is what it pays to understand the markets and how they work. ES retracing to the most perfect confluence here. Look at this. From the last impulsive move to the upside, you have the anchored VWAP. I want to just show you here. Look at this. Respect. Perfect dollar tap of the anchored VWAP. New all-time highs. You then formed a mini range, you faked out the mini range low, you faked out the mini range high, you got another pullback, acceptance above into into the range value area high. Look, you hit into the point of control and the anchored VWAP. But simultaneously, the NQ here, okay, simultaneously the NQ also, from its last impulsive move to the upside here, right? You also are hitting into the anchored VWAP support. So Bitcoin hitting a little bit of confluence here in terms of the timing. You are faking out the low while simultaneously the ES and the NQ are hitting into support. So this is what I class. You have to be very aggressive, but this is where it pays to understand what and why you're looking for. I will show you a few different posts from my group this morning. So this is in the Champions Discord, just so you can understand what we're looking at here. As we made the first low, which was this low, as we made that first low, I confirmed to my team I have not longed this low. I am not longing the retest. Why? Again, because of the order flow. I really recommend, if you are not a member, you really should be, because I've done a whole live stream this morning. A half an hour live stream talking them through all this price action in a lot more detail than I'm going to go through here. But anyway, I explained I was not longing this retest. We had not formed this low yet. I was saying I'm waiting for lower. I didn't low this low. I'm not longing the retest, all because of the order flow. Again, you can pause and read through the screen here, but I was explaining a little bit the order flow here and why I'm expecting the new low. And then what happened is we did make a new low on Bitcoin. Okay, we did make a new low on Bitcoin, and because of the fact you got the ES lining up at that support while Bitcoin is doing its fake out, that is an acceptable scalp long trade entry. Okay, so I had an entry around $114,500. I've already hit take profit 1 and take profit 2 on this, but it's nice to see the ES and then the NQ, confirming this long trade on Bitcoin. Again, from 140, I have stop loss at entry. I've already hit take profit 1 and take profit 2. My entry is 114, ever so slightly missed my level here, which was nice. But, I'm in a scalp long trade, so I don't want to focus too much on it, but just to say that there are ways that you can get into the market. Maybe this ends in a bigger swing trade, who knows? But, that's just up to the market to decide. But in terms of the Elliott Wave Count, is it possible that we've put in the low here? I would say yes, it is possible that the low is in here. Okay, it is possible that the low is in here. But I still would not class this as a high probability yet. We haven't really seen the sign of strength. We are still below the monthly open. We are still below the bigger range value area low. If we get those reclaims, then probabilities change. But as it stands, because we have not seen any of those signs of strength, we haven't even seen a good local market structure change. So the probability is still that this can come down to lower prices. Again, this is what I want you to understand as traders. The highest probability is lower. Okay, I do believe that right now, that the highest probability is lower. And this morning, when I was taking this long, the probability was even higher. Okay, but you can see even with a massively high probability of lower prices on Bitcoin, I'm still going to be looking and taking the long trades when they're given. Okay, so, the scalp long trade on Bitcoin, again, it could end in bigger, but it's this realization of, okay, even when things are looking super bearish, the one and only trade that I was looking for was the long off a support, which was taken. So that's just something to super integrate into your brain, right? We were not looking to short the lows down here, just as we were not looking to long the rise up here. When price rises, we look for shorts. When price drops, we look for longs. As simple as that. So I digress, and I want to try and wrap this video up now before it goes on too long. Is it possible that low is in here? It is possible, of course, but it is not a high probability yet. What do you want to see if you want to try and start to get confirmation of a low being in? Well, you want to start to find strength, right? Without strength, the probability is still lower. you can start to look at this local range. That is a value area low coming in at $117,000. Okay, you got the value area low, $117,000. Be aware of your monthly open. And then you got big levels sat at around $118,000. So this is where trading is complex, and I'm sorry that I got to say this because it is. If you wait for the strength, let's say you're waiting for the strength of a reclaim of, let's say, just $118,000. You're waiting for this to do the strength. Well, you can see you've already missed the long, right? You've already missed the trade. So if you wait too long for too much strength, then you miss the trade. It's as simple as that. So you can see this is why you sometimes have to be aggressive while the probabilities are still low if you want to trade entry. Because if you wait for too much confirmation, you simply miss the trade. So that's why it's hard and why it's complex. Because you've got to be longing when you're feeling the, let's say you're feeling the most bearish, you've got to long. And when you're feeling the most bullish, that's where you got to bring yourself to take the shorts. Because if you wait too long on the short, you miss. If you wait too long on the long, you missed the long. So that's where trading is a little bit difficult. But again, this video could go on so much longer because I could talk for ages about this topic. It is very, very big. But this is where I'd be waiting for more local signs of strength. Okay, so local market structure changes. Because if you wait for the bigger sign of strength for 118K, you've missed it. But if you can get in, closer to 116.5, maybe on like some recess, and then of course you get much better risk to reward ratios. I say again, I digress and I move on to the final part of this video, which is with a bigger move to the downsides. Before that, I just got one really quick announcement, and that is, you've probably seen it if you haven't already, but we have got this epic new template released on Atos. I am no longer using ExoCharts. ExoCharts, goodbye. Atos, hello. This is much more reliable, just better software, let's be honest. Give it a try for yourself. Right now, Atos is free for crypto. You can download this template, right? You can test it out for free. See if you like Atos. I really believe that you will. But there is zero downside in trying, right? This is free software for crypto at the moment. So test it out for the next week. See if you like Atos. I've done all the hard work of making the template. This is the hardest part, the templates. I've done all the hard work. This took a lot of time and effort. And, I really would, say come and try it. The one thing that I know people were hesitant on trying Atos is because of if you were a Mac user, and I got some amazing bit of news that if you are a Chart Champions member, so if you are within the paid community, you can join a closed beta test of Atos for Apple Mac. So this is like amazing. So if you're a Windows user, come over to Chart Champions, go into the vault, the template's already there. If you are an Apple Mac user, we can also get you into the closed beta. So this is just good news. If you want the Atos, you know where to get it. And yeah, I would say this is free for crypto. Test it out. There's no downside of testing it. And I really, truly believe that if you are on, especially if you're on ExoCharts, it's going to be like a whole new world. ExoCharts is just super dead software right now. Glitches after glitches. Do yourself a favor. Test this for free. And I really don't think you'll go back to ExoCharts because it's not so good at the moment, right? So anyway, I digress, and I say, yeah, if you want to get the template, you could get that over at chartchampions.com, right? Final bit that I want to say here is about the bigger move to the downside. So this is where we come into realistic targets, and that is really simple. We look at the length of the W. We move it back to the X. You can see how we got this really nice confluence zone down and around here at $110,000. Okay, so $110,000 for me, very nice zone. Up to the old range value area high. You can see how this still would be technically valid above the wave 1. Remember, this is how we confirmed the X wave as we come down below the wave 1. This, of course, would invalidate the wave 4. You need to know where you're wrong. But we have a nice opportunity from 111 really to $108,000. This is where I wait for lower term time frame entry triggers. So I wouldn't just have the Elliott Wave Count and say, right, I'm just going to enter here where I put a 1-to-1. I wait for lower term time frame confirmation, the order flow, the entry triggers, right? This is a very crucial part of my trading strategy, which again is all taught on our website. So it's something you can learn, the trading strategy, but I will wait for the lower term time frame entry trigger. Much like I took this scalp trade this morning off of a lower term time frame entry trigger, right? Fake out of the low, or simultaneously we have the ES and NQ hitting support. It was enough for an entry trigger, and it's enough for a very big winning trade that I'm in right now. That's a very nice long. Again, still expectation is that I'll get stopped out, but maybe we can get a bigger rise to the upside before the next drop, right? That would be my expectation there. And so when we get this next bigger rise to the upside, biggest resistance is around $118,000, but I think the value area low will be, let's say more key here. And relevant to us coming in at $117,000. This is where we could put in the next lower high to bring us down for the bigger wave 4. So yes, that's where I would say the next key resistance is, where I'd look for the shorts, where I'm coming to look down for my bigger long trades. You do have the final bit of analysis here that I will just remind you of really quickly. And that, of course, is the bigger 3 drives. We have drive 1, we have drive 2, and then we have drive 3. That is for a reversal. So this is a bullish 3 drives pattern. Anyway, I want to wrap it up here because I need to get off because I want to actually go and trade New York Open now shortly. So yeah, I will end by saying this. Sorry. A bit longer video, but I do these videos to truly, I could do the information in 1 minute, tell you the levels, move on, but I want to do the education. I want to help you because I know that these are complex topics. They're not easy, and that's why it's hard for me to go across in a YouTube video, right, and explain a super complex topic. I need to break it down in an easy way, and I try my best at that. But of course, I cannot do that in a few minutes. So, what we mean here, 20 minutes. But I just really hope that this has been useful for you. I hope that you have found it helpful. That is my goal as a mentor, that you can use this information. I will say this as well. So, of course, the Attis template is for the members. This is a members-only template. But I'm open to releasing this to the public. All you need to do is give a massive like to this video. Give a massive like to this video. This video will definitely get over 5,000 views. And I would just say half of that, right? Let's say 2,500 likes. If you get the likes up to that, I will share the template. Otherwise, okay, you can get it over at chartchampions.com. I think that's a nice fair deal though. Final words from me will be, I will show you that. Look at this. Got a nice little Chart Champions football top. Had to show you that actually before I ended. Yeah, I'm going to be playing football this weekend, and this is the top I'm going to be wearing. Anyway, it makes me happy. Hope you've enjoyed this video. I truly do. Hope you have a brilliant time. I hope that you've enjoyed, and I pray for everybody in the community this weekend. I will be praying for you all. I hope that you understand, you learn, and you start to come to grips with what we're teaching here. It is not impossible. It is definitely a process. It is learnable, and you will get there. Cheers, everybody. Thank you. That's me signing out. Goodbye.